Hi YouTube, please give me a moment while I connect to Facebook. We'll be getting started momentarily. And I think we should be live on Facebook. Hi everybody, welcome to the Strategic Swing Trader. I am Sami Abusad, Director of Education at T3 Live. Hope you're doing well. We're gonna go over the market and we'll go over some swing ideas for next week. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. Also, if you'd like to download a copy of my free ebook, link for that is in the description below the video. If you find benefit in today's video, I want to ask you to please hit the like button. That helps support our channel. And if you have any questions for us, reach out to customer service by emailing info@t3live.com. info@t3live.com. Okay, here we go. We're gonna go over the market first, and then we'll go over the swing ideas, which is a very, very good list for next week. You know, I don't always find great ideas, but this week's ideas I think you're gonna like a lot. I copied and pasted the list in the description also for you, for your convenience. All right, so here we go. Last Friday, on last weekend when I did the video, the market looked exactly like this. So we had a run up on the daily chart, and the hourly was really bullish. The daily was at the declining 20. The weekly was in a downtrend. And I said the bias, who knows until we resolve the conflict. The daily was bearish. The weekly was putting in a buy setup. It had triggered. This was a green bar. Okay. So it looked like that. It's a weekly buy setup, and the hourly was bullish. Now, since the weekly was in a downtrend, I said I think it will resolve lower, right? That was last week, and of course the buy setup, as you can see, you know, we went higher here on the weekly chart, triggered long, and the buy setup failed, and it failed right away on Monday morning when CPI came a little bit higher, 1/10. I believe it was 0.1% higher than expected. And yet the market had, I read, it was the most bearish, biggest down day since June of 2020. So, I mean, a huge move down when CPI was just a tiny bit more than expected. But that goes to show you how expectations is everything, basically. You know, I think most investors were expecting CPI to come in lower than expected. It came in a tiny bit higher than expected, leading the market leading the market to crash. Now we dropped really hard on Monday. We had a 1, 2, 3. So the next day was a doji bar, as is usually the case after wide range bar. So just like here, Fed announcement, I think. Wide range bar, doji bar, the next day. It's usually, you know, I'd say 80% of the time after a really big red bar or really big green bar, you get a doji bar. We got the doji bar. Then the market triggered short. I have the Q short. I have the SQQ long. So 1, 2, 3 short triggered, and it didn't really go very far. Okay, but the bias, because now we have a downtrend on the daily, we also have a downtrend on the weekly. No reason to be bullish. There's no reason to have a bullish bias. So my bias is bearish. Next stop would be about 280, and then the yearly low, I don't know what it is exactly, but this red bar's low, around 270 or so. But those are the next stops. This is perhaps, I want to say two things. This is perhaps the most expected recession or downtrend that I've ever seen in my life. Every other downtrend or recession came really quickly, like March of 2020, the pandemic, the Great Recession in 2007 through 2009. That happened really quickly, and we had a free fall. This is the slowest sell-off that I've ever seen in my life. Okay, and then that's one thing about it. The other thing about it that's not great is everybody's expecting it. You can be sure that most of the time when everybody's expecting something in the market, it goes the other way. Okay, so I don't like the fact that this recession, if we're gonna have a recession, if we're already in a recession, I don't like the fact that everybody's expecting it, because the market tends to prove everybody wrong most of the time. So perhaps that's why we're not, if you look at the chart of the market here, the daily chart, we really haven't gone anywhere the last 3 months or so, 4 months maybe. Maybe even going back, I don't know. That's May. We're still at the same prices. Okay, we rallied hard, we dropped hard, and you look at Bitcoin, the same thing. For the last 3 to 4 months, Bitcoin is basically around the same price. Hasn't gone anywhere. So it's been a weird sell-off, a weird market crash. But make no mistake about it. We have a daily that's very bearish. We have a weekly that's very bearish. And now we have a monthly that's really bearish as well. So I am not trying to make the case for a bullish scenario. I am just simply stating the fact that this is probably the most highly anticipated recession or downward move I've ever been a part of. And that's probably why the last few months we really haven't gone anywhere. Initially, when things were when things were starting to look a little, inflation was starting to go way up, the market was crashing really hard the first few months of the year. Okay, we had one major bounce, and that was in March. And then every other bar was a huge red bar. And then the last few months, since March, basically, we've gone completely sideways. Since May, we've gone completely sideways. So that's May, June, July, August, and we're through most of September too. That's almost 5 months. So, and again, I think that's because it's been anticipated big time, and the market is the greatest discounting mechanism in the world. It discounts expectations right away. So maybe that's why, but I'm still bearish, and I'm still expecting lower prices in the future. All right, here is the watch list. Funny enough, the bullish watch list is better than the bearish watch list. I spent first 5 minutes of this video telling you that the market is bearish, and yet the bullish watch list is actually better. ADN, I'm not in it, but it triggered on Friday. Basically, that should have been the trigger. I don't know. I wasn't aware of it. I found it on the weekend. It looks amazing. So I'm sharing it with you. This watch list changes every day. So tomorrow I'll have a new watch list. So truly, this is a watch list just for one day. Now, some of it won't trigger and will still be good to play on Tuesday, Wednesday, or Thursday. But ADN already triggered, so I'm not gonna chase it, but I'm just sharing it with you because it looks really, really good. So to keep an eye on it, to look for an entry. Okay, so oops, that's the ADN. I wrote over it by mistake, and here's the weekly chart on it. I mean, tell me this doesn't look great. It's a transition A on the weekly chart. Love it. That's the ADN. ENPH. It's got to be the most bullish stock in the country. I mean, it's a solar stock, all-time high, amazing bullishness. So I like it as a long over the base right here, over the all-time high, and with a stop under the 20 MA and under the base too. So I like it a lot. It's a big stop. It's an expensive stock. I remember when I used to trade ENPH at $8, and then so I played it 4 times as an earnings play. When it was maybe at 5 to 8, and then at 12, at 15, 16, and then the last time when it jumped to 30, I shorted it, and it went to 40. And so I got it right the first 3 times, and then the 4th time I got killed on ENPH, and that was just a few years ago. Again, was $8 or so. Now it's at 318. So it's a remarkable stock, and I still like it higher. Humana had a very bullish gap on Thursday. It's not a narrow range bar, but it's a narrow body bar. The body of the candle is very narrow. So I really like it over the highs of both Thursday and Friday's bar, whichever is higher. It looks like it's Thursday, and then stop under Friday's low. So I really like it, but it needs to clear first 501.50. Let's just say 501.50. What happens if Humana were tomorrow or next week to completely tank? Let's pretend this is Monday, Tuesday. Then no harm, no foul. Then didn't trigger. It only counts if it triggers and fails. Got it? So it would only count as a play if it actually takes out 501.30. Okay, 501.50, let's just say. All right, LTCH is trying to set up as a transition A. Remember the ADN on the weekly chart? I showed you the ADN. It was, you know, the 20 MA was coming from, the blue line was coming from underneath price, starting to curl and point up. We have the same exact pattern. Not as good because it's a little bit of a flat 20. We like it to have an arch. But we have a similar pattern on the LTCH daily chart. So I like a long over about 145 or so, stop under the hourly base. So the stop would be under about 120. Over 145, stop 120, and really has a lot of room. First resistance area would be around $2, but that's not very much. And then the next resistance area would be about 350, the 200 MA. All right, Netflix. Netflix is showing some bullishness. Look at the weekly. So Netflix also has that curling 20. I like it, not too bad. So long over 242.30 and then stop under 214. Wow, it's a big stop. So over the base, over 242.30, stop under 215.80 is a really big stop on Netflix. Now, if we look at Netflix monthly chart, so here it is. As you can see, well, let me just go to logarithmic scaling real quick here. It just, you know, it shows it better when it's on long-term charts to go to logarithmic. You see how it ended the long-term trend, Netflix? So Netflix is not something that's going to, so it ended the long-term trend. That's not how you draw a trend line, but you get the point. You have to connect the furthest, the lowest lower pivot low with the highest pivot low. So there you go. That's how you draw it. But anyway, it ended the long-term uptrend that it's been in for 10 years or so. Okay, so it's not going back up anytime soon. But could it get back up to 350, to the red bar's high? I think so. Barring a complete crash in the market, I think it could easily get back up to about $350, but not to 750 where it was, not even to 500. I don't think, but to about 350, I think it's possible. So that's Netflix. PINS has been pretty bullish and has the same kind of curling 20 MA on the weekly chart. I like it as a 1, 2, 3, a long over $26, stop under 23.60, and target about up here. So it has a pretty good reward to risk on the PINS. The RGLS, let's take a look at it. Okay, RGLS is just nice and bullish daily, but it does have the 200 above. It has kind of a messy chart, so I'm going to pass on it, but it is really bullish. The hourly is also bullish. That's the hourly chart. But for now, I don't see a good entry. And guess what? The EV stocks, namely Tesla and RIVN, are very, very bullish. Not, what is it? What's the other one? Lucid. I forgot the name. LCID. Not Lucid, but RIVN. Weekly is very good. I wish, I wish I would have gotten in the RIVN right here when it triggered that buy setup, but it looks higher still. I'm not gonna jump in on it, but I like the RIVN, and Tesla is remarkable. It's not even on my watch list because I don't think it's ready yet. But that's the weekly chart. Here's the monthly on Tesla, staying close to the all-time high. Look at the daily. After dropping, it went back above the 20 and above the 200. So now the longer the Tesla base is, the better it becomes for a breakout. Now, of course, Tesla is a market stock, so if the market crashes, it will probably crash with it. But if Tesla can base for a little while here, I will be looking to play it long. Okay, over the double top and then stop right here on Tesla. Okay, but it's not ready. It's not even on my watch list for today. I just remember to talk about it because of RIVN. SUNW, it's trying to go back up above the 20, so long over 396, stop under 350. So it's about a 50-cent stop. It's not my favorite yet. I think if it can go sideways for a couple more days, it'll be even better. VNET. VNET has a nice hourly base breakout. So long over the base, whatever the highest point is, it needs to clear it, and stop can be as tight as Friday's low, this bar's low, which is 580, and the entry should be over 630 or so, or 629, 630 by 580. So it's a 50-cent stop. Looks pretty good. And then wicks, I'm liking the wicks on the long-term time frame, on the monthly namely, okay, for a bounce back up to about $100, I would say, on the wicks. So weekly looks decent also to bounce back up to $100. The daily is a little too sloppy, so I'd love to see it base for a little bit, but I like the wicks higher. And last but not least is the YSG, which is a China stock. Look at the weekly buy setup on it. I mean, this is pretty. It's a deep pullback, but I like it over 123, call it 125. Stop, the tightest stop would be about 106. That's the tightest. I would give it to 102, okay, which is the red bar's low. And then target the prior high about $2 or so. So it looks pretty nice. Pretty nice on the YSG. Okay, the bearish list, not as many and not as good. It's weird. I would love for the bearish list to be better, but it isn't. We got triggered into Meta on Friday. It's not on the list because it already triggered, but it didn't really go anywhere. Friday or Thursday? Friday. Triggered short. Looks lower. That's Facebook. Okay, looks pretty lower. I don't have it on the list, but I just remembered that Facebook triggered on Friday, and it's not too late, and it's been basing under the 20 for a long time. Looks lower. And then the meme stocks, your favorite stocks, look lower, I'm sorry to say. AMC, it triggered already on Friday, so it should have been under 922. As you can see, it closed at 898, so it's about 22 cents late. Target 1 would be the prior low around 790. BBBY has not triggered, and it looks good. So short under this bar's low, stop up here, maybe target 1, but that would be, really low reward to risk. I think BBBY, Bed Bath & Beyond, is headed down to $5, or if not $4.50. So it has a daily buy sell setup. So AMC and BBBY look alike, but AMC already triggered. IRNT had a big gap down on earnings on Thursday. Has a couple of now narrow body bars. I wish they were narrow range bars because then the stop would be tighter, but I like it lower under 109, stop over 140. It gapped under several months worth of basing, so everybody that bought it this whole year, but especially the ones that bought it the last few months, several months, are now all underwater. And so I like it lower. Lucid, as I said, actually looks lower. It doesn't look higher like Rivian and Tesla, and it has a daily sell setup. It's pretty good. It's not bad short under the green bar's low, stop above the red bar's high. So I'll give you the exact numbers. So that would be under $16. It's $16.08, but I like to give things a little bit of room to make sure I don't get tagged by a penny or two. Under $16, stop over $17.70. And then target 1 would be about 14. Target 2, Lucid, I think if any of the EV companies is going under, I think Lucid will be the one. I'm just telling you what I think. It's not going to be Rivian, obviously not going to be Tesla, but if any of the big names in the EV sector is going to get killed, I think it's Lucid. I bet you it's headed back down to $10 eventually if the market does end up dropping like everybody's expecting it to. So that's Lucid. And last but not least is the RKLB, which, as you can see, has a 1, 2, 3 pattern on the daily chart. Short under 490, stop over 512, and target the next support area, which would be around $4 or so. Okay, so I hope you enjoyed today's video. I hope you enjoyed my analysis and you found benefit in it. And if you have, please be sure to check out the links in the description of the video. And if you have any questions, reach out by emailing us info@t3live.com. Thank you so much for sticking around until the end. I'm Sami Abasad with T3 Live. Good trading, everybody. Take care.